So now I was saying that the control accounts that we may have, we have the debtors, and then we have the creditors. And of course, the debtors control account tracks all the outstanding amounts from your debtors, those who take items on credit, okay? Then the creditors control account tracks all what is due to the suppliers, those who supply you with items on credit. So the balance of the control account should be the same as the sum of all individual ledger balances. For example, if I have two debtors, I have like Peter owing us 200, Joy owing me 300, okay? And I have prepared their individual ledger accounts. So once I prepare one control account to track the two, okay? When I add these two, of course, this comes to 500. So meaning that my total on the control account should be 500 what? 1,000. Okay? The same applies to creditors. Now, the question is, why is it necessary to prepare control accounts? Is it necessary? The answer is yes, because the number of advantages of having these control accounts. Number one, it is helpful in detecting fraud, okay? Because these control accounts are usually prepared by responsible officials who have the responsibility of controlling fraud. And since all entries pass through these accounts, you can easily identify where the fraud has been committed, especially when you find that somebody has manipulated the accounts in the ledgers. And this eventually enhances or strengthens the organization's internal control systems. Then also checking errors, because ideally you find that these books of accounts are prepared by people, human beings, and of course you can make an error. So once you prepare the control and you find that the control accounts do not tally with the individual ledger balances, then you can easily get to know that maybe there is a mistake somewhere and you can easily correct it. Then also another advantage, it improves management efficiency, because the creditors and debtors balances can be obtained at first glance on duly balanced off control account. And of course, this saves time that you would have, that management would have wasted. Or if you are the one preparing the books of accounts, you'll find that you would waste a lot of time balancing off those individual debtors and creditors what? Balances. But if you only have one account, then it is very easy to extract the amount outstanding. Then also enhances decision making, and of course decisions relating to how much should be sold on credit, and of course the provisions to be made for bad and doubtful debts on the sales made, and of course how much to be bought on credit. It is also easily reached by looking at outstanding balances on the debtors and creditors control accounts. And also lastly, we can say that these control accounts are very helpful in determination of credit sales and credit purchases. Okay, can easily know how much was sold on credit or how much was purchased on credit. So those are some of the advantages of control accounts. Now, we say that there are two types of control accounts. We have the sales ledger or debtors control account. And this is the format which is there on the first page. Okay. And you know that the debtors, of course, any opening balance is on the debit side because debtors are current assets. And from your understanding of double entry, I think you must have been told that all assets, the normal balance is a debit what? Balance. Okay. So if there are any credit sales, of course, they will increase your figure for debtors. If there are any checks dishonored, like maybe the debtors had paid you, they had given you some checks, but maybe once you bank those checks, the bank did not honor them due to a number of reasons, you will again reinstate those the amount back on the debtor's control account because it was not paid. If there is any refund for overpayments, you will increase your debtor's control account. Any returns inwards, of course, will reduce your creditors, other debtor's control account. If there is any cash or check received from a debtor, you credit sales ledger or debtor's control account because their balances will be reducing since they have paid you or cleared you. Any discounts allowed and bad debts written off, they will all reduce the debtors, the amount on the debtors control account. Then also we have for the purchases ledger or creditors control account, and because this is a liability for creditors, when there are liabilities, any opening balance will appear on the debit side, credit side, and the closing balance will appear on the debit side. Any purchases made on credit will increase your balance, purchases ledger balance. Any checks written to creditors are dishonored, you have to restate that amount back. Any refunds from creditors for overpayment, okay, will increase the purchases ledger control account. Any returns outwards, payments to creditors and discounts received will all reduce the balances on the purchases ledger control account. So basically, what I was trying to say is that a control account is just one single account that tracks sales made on credit, that tracks all the outstanding sales, okay, and purchases that have been made on credit. You can easily get to know the balances that are due to the organization or what the organization owes the third parties. That is the major purpose of preparing control accounts. And this normally happens especially where the organization has got so many debtors and creditors, because you cannot exactly get to know how much is due when you are going to balance off the individual ledgers. So mean that if you have one single account that tracks all your receivables, you can easily tell. And of course, as we said, it even helps you in decision making. Okay, because you know, should you further extend credit? Because you may find that if you've made all your sales on credit, you know there are risks associated with that. Some debtors may fail to pay. So you can guide you especially in implementation of your credit policies. Okay, now we have some illustrative examples, and as the What I normally do, I always do like 1 or 2, and then the rest are yours. I don't know whether you've finished all the other numbers on manufacturing. How many numbers have you done on manufacturing? Because I did 1, and I say that I think I did 2, and I say that you should go and do the rest. So have you done them? Are you getting me? Have you done the numbers on manufacturing? Because I've not seen anyone asking. Can I say that all the other numbers were okay? You did them?
We tried some, sir, except there was a number that was kind of complicated. I tried inquiring, but you never reached back to me.
Which one was that?
It's on it's question 2, page 11, about Jim Brothers Limited. Because they gave us depreciation information, like they gave us information in the in the table. They gave us depreciation values. And in the additional information, they still gave us other values which kind of confused us.
Let me just display it here so that you can. Let me just stop sharing this, and then I display the other one. Manufacturing. Which one exactly? Jim Brothers.
It's on page, yes.
So this one, eh?
Yes, please. When you check in that information given, there's somewhere where they told us there's a provision for depreciation, which is of plant machinery at 1st October year 6.
206 of 64.
Yes, please. Then, as you're continuing down, we're having provision for depreciation of furniture and equipment for factory and office. Then when you continue in the additional information, at 31st, they gave us, at 31st December 2012, they gave us more depreciation values.
To be provided
us,
as follows. Now,
yes.
you see, if we give you, now like what is in the trial balance there up, that one was charged in the previous year. The only depreciation that you're going to consider is for this particular year would be this. You depreciate plant and machinery at 20%, depreciate furniture at 10%. And they are all on cost. This is straight line. So I expect you to come and see what is the cost of plant and machinery. When I come here, plant and machinery, they are saying the cost is 160,000. So I will get 10% of 160,000. So that gives me 16. So that is what I will take for plant and machinery. And because it is plant and machinery, the depreciation for this plant and machinery, I'm going to charge it in the manufacturing statement or manufacturing account under factory what? Overheads. But then this depreciation for office, furniture and equipment, 10%. Actually, this one was 20%. So the depreciation for plant and machinery would be 32,000. Because 20% of 160,000, that is 32. Okay. Then furniture and equipment, 10%. I go and look at 10% for furniture. The cost is 42. Hmm? This is factory. Hmm? Furniture. Now this one for office. So I'm going to depreciate actually because they're saying furniture and equipment 10%. So when I come here under furniture and equipment, I have the one for factory. I also have the one for office. Now I'm going to compute 10% of 42,000. That is 4,200. This one will also go to the manufacturing and factory what? Overhead. Because this is an indirect cost. Then for office, 10% of 48, that is 4,800. So this one, I will take it in the profit and loss. Okay. So I think that one is clear. Then this provision, what it is given, this one will help you to determine the net book values of assets, especially if you are required to prepare the balance sheet. But in this case, I think they were not asking for the statement of financial position. So meaning that if I'm determining the balance sheet values for furniture and equipment, especially for factory, if the cost is 42, and I have the provision here as 84, I will get the one which I computed, then I add this. This is like accumulated, okay? Accumulated was charged in the previous year. So meaning that I will get this, add what I have computed, then I subtract it from the cost of the asset so that I get the net book value of my asset. I don't know whether it is clear. Is it clear?
Yeah, we are trying to pick.
You're trying to pick. This provision will help you determine the net book values, especially when you are preparing the statement of financial position, assuming it had been asked. But you will not charge it in the either manufacturing or profit and loss. Why? Because this was charged in the previous year. So the only depreciation that you will charge in the profit and loss or manufacturing, depending on where it goes, will be for this particular year, which you will compute. So meaning the provision will help you in determining the net book value. I think that one is okay. Any other issue on manufacturing? Okay, so let me stop sharing this, then I share again control accounts. So I'm going to do example number example number 2, and then illustration 4 for now. Then you'll do the rest. So we can start. So let me have someone to, okay, this is illustration 2 for Z. Then they are saying that we cash paid, creditors, sales, purchases. Okay, so all these are given here. So they're saying that we extract the figures for credit sales and credit purchase for Z. Okay. So just internalize, I'm giving you 1 minute to internalize that question and then we start. Internalize the question and then we start. Just give me, you can be internalizing the question. You give me like 5 minutes. I'm just sorting something here. Okay. So I think you've internalized the question. We can continue. So now I'm going to draw my radius. Are you getting me? Hello? Hello?
Yes, we are.
Yes, so I'm going to draw my radius here. And of course, as I said, there are two. So let me just draw my sales ledger control account. So this is my sales ledger control account, or debtors control account, because it's the same. Then I also need to draw my purchases ledger control account. Purchases ledger control account. And this is the same as creditors. Control account. So I'll begin. Now the first thing is just slot in the opening balances, and the opening balances are just given here. This is these are my opening balances. For debtors, I have 2.5. For creditors, I have 1.4. And you know that debtors, the opening balance appears on the debit side. So balance brought down 2.5. Then for creditors, the balance brought down. Can you give me the figure so that I don't need to scroll here and there? What is the opening balance? Balance brought down for creditors?
1.4.
1.4.
1.4.
1.4 or 1.5?
1.4.
1.4. Then I also need to ask myself if there is any closing balance is given here. Closing balance is given. So I need to take these two also. For debtors, 1.4. For creditors, 1.2. So balance carried down, 1.4. Carried down here. Is what?
1.2.
1.2. So I've done that. Now I will go now line by item. Cash paid to creditors. Now for this cash that is paid to creditors, that means they credited cash. So I'm going to debit the creditors account. I'll come here under creditors account. I say cash. What is the amount?
1 million.
1 million. Okay. Then I go to sales discount. I have 60. Now, sales discount, this is the same as discount what? This is the same as discount allowed. Discount allowed. Okay. Now, it is 60,000. And you know that the discount allowed affects debtors. So mean that I will come and credit the debtors account, because that means the debtors balance is reducing. Discount allowed 60,000. Then the next is what?
Purchase discount.
Purchase discount. And this one affects creditors. So to reduce the, what is another name for purchase discount? Discount received. And the amount is 60? 20? 20,000 for purchase discount. Then we have sales returns. Now, what is another name for sales returns?
Returns inwards.
And this one affects what?
It affects debtors.
It affects debtors and it reduces the debtors. So I'll come here on the sales ledger control account. I say sales returns. And the amount is how much?
40,000.
40,000. Then I go the next is purchases returns. What is another name for purchase returns?
Returns outwards.
Returns outwards. And this affects what? Purchases.
Purchases.
By reducing purchases. So these are returns, purchases, returns. What is the amount?
70,000.
70.
70,000.
Then I go to the next. Checks received from debtors. So debtors have paid, but this time they have paid you using check of 4 million. They have paid a check of 4M. So that means my debtors account won't reduce. So come here, I say bank 4 million.
Oh, my.
Bank 4 million. Cash received from debtors 1M. So if that means they have also paid using cash, so my debtors will reduce. So come and say cash. How much? 1M. Cash 1M. Then I move. Checks paid to creditors. So that means the creditors control account has reduced with 2.5. So if you checks paid to creditors, that means you are going to debit the creditors control account, and of course the corresponding credit was made in the bank account. So I'll come here, I say bank 2.5, because the creditors control account, the balance will reduce. I don't know whether you are following. Are you following?
Yes, we are.
Yes.
Then you have bad debts written off. Now, if they are bad debts, that means that the debtors balance will reduce. Okay? They will reduce. And these bad debts, because it's an expense, so we shall credit our debtors control account with bad debts. And the amount is how much?
10,000.
10,000. Then I have the next one, interest charged by creditors. Now, this interest that is charged by creditors, and of course it could arise due to several factors, because maybe you could have delayed, and you know some suppliers, once you delay their payment, they charge you interest. So meaning that if the creditors have charged you interest, their balance is going to increase. So I will come and credit the purchases ledger control account with interest charged by creditors. So come and say interest Okay. Interest. How much is it?
30,000.
30,000.
30,000. Then the next one is checks paid to creditors and dishonored. Now, these are checks that you paid the creditors, but they were not paid, they were not honored by the bank. So what does it imply? That ideally you did not pay the creditors because they were not honored by the bank. So we're going to reinstate this money back to the creditors control account. So come here, I said dishonored checks, and the purchases ledger control account. So dishonored checks. How much is it?
500,000.
500,000.
500,000. 500,000. Okay, then I have debtors checks dishonored. Now in this case, the debtors paid you, but when you bank those checks, they were not paid by the bank. So what does it imply? That we are going to reinstate this money back to the debtors account. So the 800, we shall come here and say dishonored checks, 800,000. So we shall reinstate it back to the creditors control, rather debtors control account. I think we are through with all the entries now. What remains is to balance off the figure, because what they were asking the figure for credit sales and credit purchases. So meaning that the balancing figure on each of these accounts will represent the credit sales and purchases. Now, can you balance off which side is bigger? I believe you know how to balance off the ledger accounts. So I'm giving you 1 minute to balance off this ledger account so that we can have we know exactly how much to take. Which side is bigger? Now I see that this is 2.5 plus 800. Here I see the credit side is bigger. What is the balancing total? What is the balancing total here?
6,510,000.
6,510,000. So to get 6,510,000, the balancing figure represents the figure for credit sales. And that is how much?
3,210,000.
3,210,000. Like that?
Yes.
Okay. So this is the figure for credit sales, which they were telling us to extract. So I also do the same for the creditors control account. Which side is bigger? I see the debit side is bigger. Mm-hmm.
$4,790,000.
4,790,000.
90.
So to get 4,790,000, the balancing figure represents the figure for credit. Credit what? Purchases. So what is the amount?
2,860,000.
2,860,000. So, and you are done. So we have extracted our figures for credit sales and credit purchases by preparing the control accounts. So me, I've done one number. So let me just do this one, which has got some errors, to correct, and then I will require you to do the rest of the numbers. And of course, that will mark the end of control accounts. And as I said earlier, for those of you maybe who were not joined, I am going to upload a recording on accounts for not-for-profit, or the non-profit making organizations. So I would want you to watch it before we meet again next week. Take some time. Like the way I'm conducting this session, it is the same way that really you would, the way I would be handling that area. So meaning that you watch it, so that once we come here for the online interface, then we are handling issues that maybe could have come up out of that recording, which may be things which are not clear, so that we can move very, very fast, because now we need to, by July, we should be finalizing. By end of July, no any other area. So I'm going to upload a recording on non-profit. So now let's do illustration 4, the one that has got some errors. They're saying that an accountant prepared a debtors control account, and the balance on the account on 1st October 20X8 was 25 million and 27 million on 31st of December 20X8. The list of balances from individual data ledger accounts amounted to 17.6 on 31st of December 20X8. Now, these are the what the accountant prepared. They're saying that this is the opening balance, 25, and this is the closing balance of 27. But they are saying that this balance, because we say that your balance in the individual ledger data account should match the one of control account. When you check here, what they are telling us that the list of balances from the individual data's ledger accounts amounted to 17.6 on 31st of December 20X8. So what does it imply? That this 27 million is wrong. Okay? This 27 million is wrong. It should have been 17.6, but the accountant is reflecting 27. And it is wrong due to the following errors. These are the errors that were identified. The following errors were identified. Cash of 540 received from a debtor was correctly entered in the cash book, but entered as 1540 in the control account. Okay? You know, those errors, you know, I think you still recall the errors that may not be detected by the trial balance. Then you have sales returns of 600,000 was entered on the wrong side of the debtor's control account. So that is also that you need to know. Sales returns, you ask yourself, where did we put them in the previous example that we did? And now here they are telling us that it was put in the wrong side. Then C, a check of 500,000, which was received from a debtor, was dishonored. This was entered only in the sales ledger and not in the control account. You see, this is an error of omission, which we also must correct. D, bad debts amounting 2 million were written off in the sales ledger, but no entry was made in the control account. This is also, we need to correct this. E, A sale of goods to James for 1.5 million on credit was omitted from the control account. F, the sales day book total was 20.8, but it was posted to the control account as 28 million. So you're saying that you will make the corrections to the control account so that the adjusted control account balance reconciles with the list of individual data balances. So this is what we need to correct so that the closing balance at the end of the year should reflect 17.6, not 27 million as what is portrayed there. So I'm going to draw my ledger account. Let me just draw my ledger. Draw my ledger. So this is the sales ledger. Sales ledger. Control account. I have the opening balance. The balance brought down. Balance brought down is 25 million, because this is what is given here. So this is 25. And the balance carried down, of course, the accountant has 27 million, but it is wrong. So I need to reconcile these errors, correct these errors, not reconcile, but correct the errors so that at last I will have my closing balance of 17.6. That is at the end of the year. So what I'm going to have now, let me just go and see the errors. A cash of 540 received from a debtor was correctly entered in the cash book, but entered as 1,540,000 in the control account. So what does this one signify? That you received 540,000. You have recorded this amount correctly in the cash book, because if you receive it from a debtor, it means that you will debit your debtor's account with 500 and you rather debit your cash book, the cash account within your cash book, 540. But then the corresponding credit should be in the debtor's account. In this case, we have a control account. So I should have credited my creditor's control account with 540. But what did I do? I credited the control account with 1,540,000 with a higher amount which the debtor did not pay. So in this case, to correct the error, what do I have to do? I need to look at the difference so that I restate it back on the debtor's account, because this money was not paid. I don't know whether you get me, because what you received is 540. You correctly recorded it in your cash book. But now, when it came to crediting the creditor's control account, you credited it with 1,540,000. So where did you get that? The debtor has only paid you 540. Now for you, you are crediting his account with 1,540,000. You'll be cheating yourself. So we need to reinstate. How much am I going to reinstate? To reinstate on the debtor's account. How much am I going to reinstate? Are you online?
I think 1 million.
Yes, 1 million, because that money was not paid to you. So what I'm going to do, I will come here in the sales ledger control account. I say, this is, there was an error of 1 million. Okay. An error of 1 million. All that money was not paid to you. So you are restating it back to this sales ledger or data's control account. Then I got to note B. Sales returns of 600,000 was entered on the wrong side of the data's control account. Now, if I may ask you, in the previous illustration, where did we put sales returns?
On the credit side.
Credit side. Of which account?
Of the
Of
sales
the data.
account.
Of the data's control account. Now here they are saying that they put it on the wrong side of the data's control account. So that means they put it on which side? They put it on the debit
side.
debit side. So that means we must correct this error. So meaning that by correcting the error, then that means I will come and credit the sales ledger control account with sales returns. And when I'm correcting, I'm going to credit my sales ledger control account with how much?
With
With how much?
600,000.
Now, if I credit with 600,000, would I have corrected the error or I would have committed another error? Because 600,000 is already on the debit side. Now, if I credit with 600,000, that means that the two will cancel out. Those are compensating errors now. So in order to correct the error, I will have to double the figure. The 600 will have to be doubled. So I will credit it with 1.what? 1.2. I don't know whether you get that. That if you are balancing off now, you remain with the 600. Because already on the debit side, there is already 600. So if you come and credit that you're correcting the error, then you credit the sales ledger with 600, you will be committing another error. Because the two figures will cancel out. You get what I'm saying?
Yes.
Yes, sir.
Then we got C, a check of 500,000 received from a debtor was dishonored. This was entered only in the sales ledger and not in the control account. So a debtor paid you, but you banked the check, okay? It was not honored. So meaning that they're saying that it was entered only in the sales ledger, but not in the control account. So what do I need to do? Restate that money back to the debtor's account. So I'll come here, I say dishonored check. How much is it?
500,000.
I come here and say 500,000. That one is done. Then I got part D. Bad debts amounting 2 million were written off in the sales ledger, but no entry was made in the control account. So if there was no entry and bad debts, of course, they reduce our debtors control, the balance on the debtors control account. So that means I need to credit my debtors control account with bad debts. How much is it? 2 million. Okay. And a sale, not E, a sale of goods to James for 1.5 million on credit was omitted from the control account. So this is an error of omission. So I can record this entry by coming here and say This is sales. Okay. The sales to James, how much was it? 1.5. And last note, the sales day book total was 20.8, but this was posted to the control account as 28 million. Now, if the sales day book was reading 20.8, and it was, of course, as that total, that means I should have debited my sales ledger control account. But it was 20.8, but it was posted as 28. So that means that it was, what they posted was a wrong figure. So meaning that I needed to correct this error by crediting the sales ledger control account with a difference. Because the total should have been 20.8, but they debited it with 28. So I need to remove that overcast. Okay. How much is it? What is the difference?
7
7,200,000.
2 million.
Okay. So meaning that if now I balance off my ledger, if I balance off my ledger account now, which side is bigger? Which side? The debit side is bigger. So the total is what? $25, here it's 26.5.
28 million.
So this is 28. So to get 28 million, because you know, here it should also be 28, meaning that the balancing figure is the balance carried down. It should be the 17.8, which they told us. What is the balancing figure? 17.8. So after correcting the errors committed, then you should have your, is it 17.8 or 6? Is it 17.8? Should be 17.6.
17.6.
17.6. And this is exactly what they told us, that the balance, because this is the balance at the end of the year, 17.6. And of course, that would mark the end of that illustration. Meaning that our balancing figure here is 17.6. And you are done. So here I've done two numbers. So what remains, I want you to go and do, I don't know the area where you are, whether you are the only person who is there, you cannot get another person to discuss with. So, but at least you do all the other numbers, the ones that you have. And as I said, I'm going to upload a recording on accounts for not-for-profit. Okay? So that by the time you come next week, you should have watched that recording. Because once I come online the coming week, I will be asking, any other issues? Any issues that maybe were not clear from the recording, so that we can harmonize, like the one who was on manufacturing and he was confused about the provision for depreciation. So this is exactly what we shall be doing in the next session. Okay? So,
I'm requesting you display the solution for illustration 4.
Which one?
The solution for illustration 4, the one that we've just done.
This one?
Yes.
You have any issue that is not
because
clear?
for me, I get confused with the last part. After like writing down that total, how you balance them.
Huh?
Like after writing the total on the debit side and the credit side.
Yes, because this is the total. And I think
Yes.
you are told how to balance a ledger account. That you first establish which side is bigger. And then the side which has got a bigger amount will be the balancing total for all what? For all sides.
Yes.
And the difference will be the balancing figure. Now, like here, the debit side was bigger than the credit side because here there was 28, and here this is 7.2 plus 2 million, 9.2 plus 1.2, that is what? 10.2.
Yes.
Hmm?
Yes.
No, 10.4.
Yes, 10.4.
Now 10.4. If you get 28 million minus 10.4, what do you get? Isn't it 17.6?
Yes, 17.6.
Yes, and that is the balancing figure, which they were telling us here that the right figure should have been 17.6. But
Okay.
what the
Thank you.
accountant had prepared was reflecting 27. But when an investigation was done, the following errors were identified. And these are the errors that we are correcting so that we can get our closing balance of 17.6, which we've just got. Okay? So please do the rest of the numbers. I'm going to post. As I said, please, by the time you come on the live class next week, you should have watched the recording of non-profit, because I'm going to upload it.
Yes.
Actually,
Yes,
by
sir.
tomorrow, it should be on there.
Yes, sir. I'm not clear with the whatever the error that we got, which is 7.2.
Now,
How do we get that
the error
7.2?
here, you see, it is not F. They say that the sales day book total was 20.8. You must have looked at the sales day book when you are looking at books of accounts. It was 20.8. But what did they post in the control account? They posted what? 28 million. Now, if they posted in the control account 28 million, of course, if they are posting the control account, they posted it on the debit what? Side. So we are saying that they debited the sales ledger control account with the wrong figure. Instead of 20.8, for them, they posted there 28 million. Okay? Which is quite higher than what they had sold. So meaning to correct the error, I need to get this 28 minus the 20.8 so that I again credit the sales ledger control account with the difference to correct the error. And the difference is 7.2. When I get 28 minus 20.8, you get 7.2. That is what I've just done. I think that is okay now. The one who asked, are you still online?
Yes.
So have you got it?
Now I got it.
So now, please do the rest of the numbers, and control accounts will just basically be helpful, especially when I think you are looking at single entry, because you must have also looked at because I saw how we started with single entry. So you must have made control account somewhere. Even when we come to not for profit, you'll find that you will make use of control accounts. So make sure that you internet, and it is a very simple really area, not so difficult and very brief. So please ensure that you do the rest of the numbers and you do as many numbers as you can. So our next area is going to be accounts for not-for-profit organizations, because the accounts are quite different from those of manufacturing what? Organizations, or organizations that are established basically for profit motive. So meaning that we should be able to see the difference. And that's why I say that I'm going to upload a recording. So by the time you come for the live class, you should have watched that recording so that we do not take much time. We are handling issues when we are online. Maybe things that were not clear. Otherwise, see you next week. Bye-bye. Have a nice evening. And make sure that you observe the SOPs. Otherwise, Corona is real and it has really taken so many people. Okay? We meet again next week.